Test, test, 1, 2, 1, 2. Test, test, 1, 2, 1, 2. Okay, cool. I heard myself. Uh-oh. Something's up. Uh-oh. If anyone's in, can you type in the chat if you can hear me? I had just some kind of error I've never seen before. Something's up. Uh-oh. If anyone's in, can you type in the chat if you can hear me? I had just some kind of error I've never seen before. Something's up. Well, I'm gonna hope I'm okay, and I will get started here in a minute. Alright, I'm gonna go ahead and get started. Kind of running early today than normal. We're not really in my main trading session today, but that's okay. Just gonna take a look at the markets together. I had to move some stuff around scheduling wise, which is why I'm doing this a little early today. Alright, let's go ahead and get the screen open. Take a look at today's markets. I'll start with JU. Alright, yeah, I'll leave that on for now. Once again, just to check, making sure everybody can see me and hear me. See my screen, most importantly. Markets. I'll start with JU. Oh, I better do my standard disclaimers. Sorry. No limits here to remind me what to do. I'm just lost. First of all, this isn't financial advice, right? This is for education and entertainment purposes only. None of the markups I do are a signal of any kind. Always do your own due diligence. Trading is a high-risk activity. You can and will absolutely incur losses. So, use proper risk management and only risk capital on systems you've tested yourself. That being said, thank you for coming. I hope you guys do pick up something from these. Um, let's take a look at the market right now. Well, I had a question in the Discord I will get to here in a minute. First, let's just catch up on today's market. The market is on a downtrend on the 4 hour. It has swept some deep liquidity at the lowest end of this. So here is the trend leg right now, right? It's currently it's pulling back to the lower half of this trend leg. Let's throw a fib up to measure the trend leg itself. We are really deep in the retracement level. We have some deep liquidity underneath the golden zone that has been liquidated. Strong liquidity was created. That liquidity was liquidated. This is bullish price action to me. It flipped that. That position is holding. So right now, I would consider this potentially the start of the end of this pullback. Maybe. Um, just most likely the case with the flip and the liquidation. So on the 15-minute chart, I'm kind of just looking to see um, something that lines up with that bullish sentiment. So creation of strong liquidity. Um, we have some strong liquidity created for the first time here and here because we broke a high, closed above it. All right, so we have some strong liquidity. Recently, it actually liquidated that, so we can see what can happen in this zone. It might flip bullish. And looking at the session, it did have a bearish break down here. So it broke this way. It has not yet pulled back to claim any liquidity, so it could easily come back, claim this liquidity, and continue bearish based on the breakout. So that's GU. So short term, it's kind of bearish, and it could come liquidate and go bearish, maybe even liquidating that. But the overall, it's bearish with that. That's potentially ending its bearishness. This could be the start of having flipped bullish. So it's like at the precipice point where it was bearish. It's a little risky to be betting long-term bearish now. At this point, if you're going to be betting on bigger swings, I would say bullishness. Um, but we're still pulling back. We're still in the pullback phase. So I wouldn't get crazy with any bullish trades right away. I would want to see some extreme liquidity taken first. All right, let's move on and look at the NASDAQ. It was on like a very slow tear, came and created a high, liquidated, came up here, tested the high, and then started coming down. So that's the start of a longer pullback. So my analysis of that is that either this was a liquidation and it's gonna finally liquidate that stuff, which is possible, or it's going to continue to liquidate into this zone before coming up and liquidating that. So kind of either or. So let's look at the 15-minute and see if we can make sense of the choppiness. I'm going to turn off this indicator for a second. On the 15-minute, it flipped bearish after it started breaking structure down here, and then after getting deep into this zone, which is underneath all this liquidity that was created on the 4-hour chart, it flipped bullish with a lot of momentum, showing me that there's a lot of demand in this area. So I could see strong liquidity taken somewhere in this area and this holding, or it liquidating this to flip. I would not call this bullish quite yet because even with this violent, uh, like bullish liquidation right here, it all it did was come up and liquidate this stuff, and then start coming down again. So I think it's gonna have to fill all this. It might even fill underneath that. So I'd be hard pressed to call it bullish yet, but it's getting to, just like with GU, it's getting to the point where for bigger trades, this one has a lot of room to go bearish still. So I would kind of treat it as a range market and be real careful with how you're trading. Uh, it kind of liquidated this stuff, and since it did flip the point of liquidation, um, and actually even came up and liquidated where it happened. Uh, I don't know. This is looking pretty bearish. This is kind of a complicated situation though because there's a lot of bullish momentum here. So I'd just be careful and kind of wait out what it does when it fills this, if that makes sense. And is there any other? Those are the main two markets I like to look at. Is there any other markets that you guys would like me to look at specifically? And then I'll go into the Discord question. Mm -mm 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 -mm. I'm reading the Discord as I'm waiting for any thoughts on JPY. Yeah, let's do it. I have thoughts on everything, so yes. I'm gonna make sure that indicator's off. Okay. What the heck? My keyboard's being wild. Let's sometimes Olinda has the gaps. Okay. So same way. It's bullish right now, right? It's on a bullish tear. Australian dollar's way stronger than Japanese yen right now, just kind of chugging along like that. A nice healthy trend too. This is like a nice angled trend. Now that is overextended. We can go up to the daily and see we've just broken structure on the daily. So we're due for a pullback anytime, but it doesn't start till it starts. So let's take a look at the 4 hour and see if we're getting any signs of pullback. Well, we're holding a demand zone, so not really unless it comes under here. There's no real reason to think that we're pulling back yet, so this is bullish until it's not. So 15-minute, I just like to look at strong liquidations to get on the bullish side. Now we've gone bearish on the 15-minute for a while. We flipped bullish, and let me see, was there any strong liquidity? Uh, Yeah, it kind of started forming strong liquidity at this point here because it did create higher highs in the internal, but not really. So no, this is the first strong new liquidity formed here. So let's look over here and see if it took any. This liquidity right here was taken. It flipped and closed above it right there. The zone that caused it was actually the low right here, and that is currently holding. So as of right now, this is a sign that's potentially bullish. I do want to see this strong liquidity swept, so I don't know, be cautious if you're going bullish at this point. I don't know if this is going to hold or if it needs to liquidate the strong liquidity right there on the 15-minute to continue the trend, which I like to wait for, but it is currently holding and it did flip from liquidity taken right here at the first flip zone over here. So it is possible that this is the start of this bullish continuation to continue up to another leg or something like that. But I'm just wary because to continue the 4 hour trend, it usually takes a lot of liquidity. So I would like to see it take this out and then flip. So hopefully that makes sense. So either these are kind of the two scenarios I'm looking for right now. It to hold here and eventually like start taking these highs, switch bullish. Or scenario two, it's sweeping this stuff here. And then I don't know how low it goes, but then it flips the sweep point and that holds and that starts the trend. Those are kind of the two scenarios. So like either way, um, because we haven't switched yet, even though a pullback can happen at any point. Like it could be happening right here. Um, but it hasn't happened yet. It hasn't even broken this fractal low on the daily. I would say bullish until it's not. So just look for strong liquidity that's flipping in your direction. Kind of already happened right here, so it could be the start of bullish just literally right now. Like it could be, but again, session's about to start. There's strong liquidity there. I would be careful of it. And just be on the lookout for that. So either bullish now or a sweep of that. Now, if I'm wrong, I'll be wrong in that it'll sweep this and then just keep going down. If that's the case, it's going to start targeting liquidity, and then you have to look at it like this. Where was the last leg? So, boom, made a high here, pulled back here, made new high here, kind of pulled back. Yeah, I'd say that's a pullback. This is probably all that. Pull back here, broke that. Yeah, that's the first kind of deep pullback. And then uh, right there. So you could measure it along that. Right, here's that. And because if you're going to measure the total leg right here, it has to pull back relative to that. That is only the measuring stick if it breaks this low right here. If it breaks the low that was created right here. If it breaks that low, then this becomes the measuring stick. Does that make sense? So there's no reason to use a whole trend measuring stick if it hasn't even broken the internal lows yet. So let's just use internal structure, which I was just mapping out that right there. And we're at the golden zone. So it could still liquidate the stuff and go bullish technically still. I wouldn't worry about full bearish pullback on the daily until it actually breaks this, honestly. Because it could even sweep that and flip bullish and continue the 4 hour, the 4 hour leg. So as of right now, I'm kind of like in the wait for a nice bullish maneuver, wait for a liquidation and get a bullish maneuver. Or for those aggressive traders, that means you have bearish price action to follow it down until it does that. I'm just very wary because we're in a demand zone. So I don't like to call trading against um, the possible liquidation when you're at the zone itself, because that means you don't have that much distance before the fight starts. So yeah, I guess hopefully that makes sense. That's it. That's AJ. Is like it's kind of bearish right now, but it's at the point where it's like here's where it's about to flip bullish probably. Like here's where I would suspect it to flip bullish. So I'd be wary of taking a long bearish trade anywhere right now, and instead be on the lookout for a potential bullish maneuver. Yeah, not to beat that dead horse too much. Anyway, sorry. Hopefully that was explained. Any other markets? I'm going to go ahead and get into the question here. Actually, let me finish catching up. I was catching up on the chat to see if I missed anything else. Um, okay, this is actually a really easy thing to answer, so I'm just going to go over it really quick. The user asked, I would like to know how you handle news. Is that a relevant factor in price action trading? And what are your rules? Also, with the current macroeconomics, I was wondering if holding trades multiple days is riskier. Does macroeconomics make trading price action and liquidity and SMC concepts harder? How do you deal with this? Thanks. So let's tackle these one at a time. I'd like to know how you handle news. Is it a relevant factor in price action trading, and what are your rules? Yes, I use my FX book. I literally filter it to only show. I don't have OBS right now shown to set up to show my other um, screen stuff, but literally go to filters and I filter it so that it's only high impact news, nothing else. So it's just high impact news. And then for me personally, I'm only worried about a couple of very major um, currency paired news. So I have it set for USD, um, Euro, GBP, China, and Japan. And that's it. Just that and high impact news only. And that is just to see basically when um, the biggest news that affects like the global economics hits. And then when that happens, I'm only looking for certain things. I'm looking for interest rate, like CPI related stuff, PPI related stuff, NFP, US NFP, things like that, things that really rock the market. And then I just don't trade that day. There's no reason, or it maybe many hours before, like if I'm in the market Asian session, I might take like a 5 minute trade or something like that, and because the market is sluggish and waits for the news. um so that's kind of how I handle how do I trade news. The other part of the question is it relevant, is it a relevant factor in price action trading? It's arguably the biggest factor in price action trading, the biggest hidden factor. What I mean by that is, as a price action trader, you shouldn't have to worry about macroeconomics at all because everything is on the chart that you need already. All the data that you need is on the chart. But having macroeconomics gives you a leading indicator of things, and if you have the price action to back up that leading indicator, you can take huge swings in the market, and that's how to make the most money as a trader. So yes, it is relevant price action trading, and it's eventually really important to learn, but it's not necessary. You can ignore macroeconomics and be a price action trader. With current macroeconomics, meaning I'm guessing meaning like the war and things like that that make markets more volatile. I was wondering if holding trades multiple days is riskier. Inherently, yes. Being in the market at all during volatile times is inherently riskier, but that also means more opportunity. It just means be strict with your trading plan. And yes, being in the market multiple days is riskier because anything can happen that rocks the market at market open. But um, just understand your risk factor and look at how often the market liquidates to how many points, and make sure that you have a risk plan in place that does that. Don't hold overnight if the way that the market can move during this volatile time can rock your account. That's You can always go down to the 5 minute or something like that and take the same concepts. Uh, does macroeconomics make price action and liquidity and SMC concepts harder? No, I think they're two separate things. I think that when crazy macroeconomics happen that rock the market in really volatile ways, it makes all trading harder because stop losses become less um, mm, concrete and powerful. They lose some of their value of protecting your capital, and that's dangerous. So it makes all trading harder. So yes, it does make price action and liquidity harder, but they're also not specifically like they're separate things. You're learning your trading system separately than macroeconomics is affecting your trading system, unless your trading system is revolves around macroeconomics, if that makes sense. Um, that's just to answer those questions. That's pretty much it. I mean, it's really simple. To me, news is really not relevant to price action trading in the way that I teach it. Therefore, I use news separately and focus on it just as a leading indicator on what could be happening in the markets. So yeah, I don't think I don't focus on it that much, especially when it comes to the teaching aspect of this stuff. All right, well, that was pretty much it for that question. Does anyone have any other important questions? And then we'll go, I'm going to go back to GU and I'm going to see if we can get like a mock session going. It's a little bit before session, but if the market is moving, maybe we can get in a demo trade on like a lower time frame. Matter of fact, look at this. We just liquidated. Where was I on GU? Oh, yeah. We're at this part. We're waiting for, oh, yep, it liquidated this right here on the 5 minute. Um, So we're going to flip, although it did break below in the Asian sessions range. So if I am going to be taking any bullish move, it will probably only be up to liquidate whatever this stuff is, depending on the distance. So take a look at that. Let me see if there's any questions. Any other market you want me to look at, or anybody else? I pretty much look at every single market the exact same way because it makes sense to me. There are other previous recordings that you guys can look back on that explains like the way I look at the market and my concepts. If anyone has any specific questions about it, since I technically have time tonight, we can go over like my philosophy and why I look at the market the way I do, but I do have extensive videos explaining it. I'd say the main ones to go back are on my playlist for anyone that's new. I have one that's titled Mapping Market Structure, and then one that is chained right off of it that is using internal structure as a guide, and I recommend kind of absorbing those. If you have time, gold, okay, yeah. I don't like trading gold. Gold is I like separate my investable assets or swing trade assets, swing trading in my life, and that I like hold for weeks or months or whatever, and my trading. So I don't actually trade gold, but I will, however, take a look at it. So I look at gold the same as I look at any other asset, but gold also moves very slowly and kind of like chugs along and then gets really volatile and then moves slow. So you got to keep that in mind. So anyway, we had um, a liquidation to a bullish move. It did not break the high and then it started breaking the low. That isn't always a good sign, actually, even though I'm bullish on gold. Let's take a look at what that liquidation could be on a higher time frame. Okay, well, I mean, it's really just an internal structure liquidation all the way down to the first flip zone of the internal structure. So that's not bad at all. That's not really a bearish sign. That's just a liquidation sign. So that's good. So we have the liquidation. Have we flipped the point of liquidation yet? Doo-doo-doo. Lowest point of liquidity was this stuff here, which was right there. It closed immediately above that on like the first candle back out and came and filled the zone that held it and then came in bullish. So this is a bullish sign. So honestly, even though it hasn't really switched any structure yet on the 4 hour, it is the very first leading indicator that that liquidation is a bullish one. Honestly, so this is really early to call, and this is quite a bearish drop, but this is actually a pretty bullish sign to continue the trend, if I'm honest. I hate saying that because it's quite a far distance, and I don't want to get anyone's hope up. That is any kind of bullish or bearish position. I don't want to make you scared if you're in a bearish position at this point, but that is not a bad sign for same concepts as before, though. I wouldn't mind seeing a strong liquidation, even on this time frame, if it happens, which the trigger in and of itself becomes a strong liquidity. So since trigger for bullishness is activated here, this is strong liquidity. But Yeah, it could literally go bullish from here. So let's take a look on the 15 minute to see. So there is where strong liquidity was formed on the 15 minute. It has not liquidated even the flip itself, but it created new strong liquidity right here. So what I would like to see personally is for it to come down and liquidate this at least. If it liquidates this at least, or even this, it could flip bullish. If it does, that is a likely indicator that it's the start of a continuation of the 4-hour trend. So I, I don't know yet. It's still early to tell, but this is the starting sign to eventually target the high itself. So this could be a continuation of the daily. Uh, I don't know yet though. It's early to tell. Way too early to tell. But I'm just saying all of the liquidation signs are in place with the way I look at things. It's possible this is a 4-hour continuation of gold, and that this is bullish price action, and if it holds and one of these flip zones liquidates or holds, it will hold its way up to the high, more likely than not. And yeah, let's go back. I'm gonna inch back over to GU every little bit and just take a look at what's happening after we have this liquidation. I guess I could just set an alert for the point. And this one. That way it'll go off. And I can come back and check. I don't have to stay on it. Okay. What am I looking at for this? False break day. Yikes. Okay. For this, I kind of want to see this taken out. All of this. Alright, got my alerts set. Yeah, no problem. No problem. Any other questions? You guys can also ask on, like, it doesn't have to be about a market. If you have other burning questions about me, my trading, or any of that kind of stuff, you totally can ask. I keep getting errors, so I hope everyone can see and hear. I keep getting like audio errors and bitrate errors and stuff like that. So I hope I'm good and still visible and stuff. OBS is being weird for me today. Alright, I was kind of stopping to see if I got any other questions. For the user that asked the question in the Discord, if they missed it, if I answered it. Let's see. Any other main markets I want to look at? I kind of want to, I really want to watch GU since it's at an interesting point. Let's do it to it. Let's, just for the sake of it, just because I'm live, go down to the 1 minute and take a look at price action. So, be, okay, liquidity here. Lowest point of liquidity taken right there. And that point of liquidation, closure happened right there. The zone that caused it is right in here. It came down and filled that, actually kind of liquidated that and flipped. So this is actually the first sign of bullish price action all the way down to the 1 minute already kind of potentially happened. So if it breaks this high, this is holding, and that's the leading indicator that this is doing its job. I hope by now, for those of you guys that watch this stuff commonly, understand how this stuff works now. That's the important part for me, is that you can just take this, open up a chart. So how I like to teach it is, because I'm just looking at candlesticks themselves and no indicators or anything fancy like that, you should be able to be told what the time and the price was, and take a chalk and a chalkboard and a ruler to make it nice and neat, and draw candlesticks yourself and trade price action with your own analysis without even needing any other tools than time and price. That's the concept that I'm trying to teach here. And in order to do that, you have to look at extreme points, points of liquidation, and what candlesticks do after they liquidate, because that's the only most, not the only, but it's the most and easiest to spot with your eyes consistent thing that is seen on a chart. And it makes sense to me because it's where brokers fill a bunch of orders. If I'm filling a whole, like if I have somebody that has like $1 billion in buys, I want $1 billion of sells to not rock the market. So I need a place that liquidates all those sells so I can fill those buy orders and continue the trend. And that only works if these concepts work, basically. First time here. What's your main strategy? Yes, I would like the link to your playlist too. Link to playlist. Let me see if I can. Uh, okay, if you're on the Discord, at me, Jezza, Jezza, at me in the Discord, and I will post the link to you there. It's easier that way than trying to find it here while I'm doing the stream and post it in this chat. So do that for me, and I will get you the link to my stream. Um, my main strategy was explained in that video, but basically I'm looking for, let's say I use what I call the anchor time frame. Okay, my higher time frame that I'm doing my analysis on, right? The big higher time frame analysis. And I want to take the trend. So let me open up my chart and let's take a look at the chart I'm on. So let's say the 4 hour. Do you see how the 4 hour is going down right now internally? Well, it's at the part where it could be going up, but I want to join in on each of these legs, right? That's the idea of my trading strategy is to join in on the next leg down. In order to do that, I go into my entry time frame and find where it liquidates. So I need a point where there's strong liquidation. For example, boom, 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 right here, right? We have a liquidation point where it liquidated all this stuff, came up and filled supply, and then flipped that zone. And the area that flipped it came back to, it came back into that zone. Not high, not that high for me, but still, that's the concept. It comes back into the zone that causes that flip. And we enter here, over here, right? Liquidation, it closes below the liquidation point. The market comes back up into that zone that causes it, and then continues down, right? Um, let's look at, here's a bullish example, right? Liquidation, right here. The market closes at the point above it right there, comes back and fills that order and continues bullish. So when it comes back and fills where the area was flipped, that is like the entry zone, right? So um, liquidation right here, right? We have liquidity right there because it broke the low. Right, both these are liquidity, both the flip zone and the extreme, so either one of those counts. Like if it comes up and does the extreme zone and liquidates and rejects it, that's just as important as it doing it to the flip zone, okay? So it closes below that point after it liquidates, and it comes and fills up that area, and then that's where you enter, and it continues, right? Right here, it liquidates all this stuff, flips it, it even leaves liquidity right there. So ideally, if it comes back and fills this, like I said, if it liquidates this, or liquidates this, any of this stuff, it's coming up and filling the area that did it and doing new liquidity to do it and then flipping. That's where it'll continue the bullish trend. That's like my core strategy. I'm just looking for it to anchor its way. So I was trying to show you areas to join the downtrend as you were going down. And remember, I said this is the start of where it could be going bullish, which is why I'm looking for more of a bullish maneuver this time instead of as we were going down when I was explaining the liquidations down, right? So it's the same thing. You're basically looking for the market to flip. So to go against the trend. So for example, the 4 hour is going down. So I want the market to be going against the trend on the 15-minute only to liquidate something and then join the trend again, basically. And that's the whole concept, if that makes sense. That's my strategy. And yeah, as for the playlist, like I said, I'll post it in the Discord. And then point of liquidation. So what is point of liquidation? Point of liquidation is when the market is, let's make this easy by switching it to a line chart. Okay, so when the market makes new structure, so see the market's going up here and then it makes new structure by going down, right? So now it's created liquidity. Every time it breaks a low, so this is strong liquidity, also this, but this is strong liquidity. So if it liquidated, that'd be a point of liquidation, right? So it makes a new low here, meaning this is liquidity, right? It makes a new low here, meaning this is liquidity. Find Hold on. Boom, boom, boom. Where do we make a new high? We're making new internal highs right here. We make a new internal high for the first time, meaning that here's a point of strong liquidity in the internal structure. So it liquidates that. And then I ask myself when it liquidates that, what's it do? So up until now, I was ignoring all of these liquidations at the low because they were with the trend. So I'm not looking to go against the trend. I was ignoring them. But look, what does it do when it liquidates? It continues, right? It liquidates, continues, liquidates. So here, it liquidates. Did it continue? No. When it liquidates, it flipped in this case. That's what I'm looking for. I'm looking for, so point of liquidation is anytime it breaks a high or a low, the point that caused that break is liquidity, right? For the, all of the candlesticks hold liquidity, but for the argument on what I'm trying to make with my strategy, that would be liquidity. So in this case, here's liquidity because we're making new highs. It's, and it's also the extreme. It's the lowest point. Even though the market is going down, it hasn't gone any lower than this, making this liquidity and this strong liquidity. Here is weak liquidity building up. Now, this weak liquidity is getting stronger and stronger and stronger as more things hold into its place. So as it creates what looks like a liquidation here, it flips and holds, it makes this very strong liquidity. Whereas this is demand, right? The cost to buy. So it liquidates this, fills this demand. So remember what I said earlier. We have a whole bunch of orders that are buys in the market, enough that it brought the price from going down to going up, and it never revisited this zone. Then it created new liquidity here, so now there's a bunch of sells underneath this zone, and I'm a broker and I want to fill the buys that are left over in this, and the only way to do that is to fill a bunch of sells. So to trick traders into having buys with sell stop losses. So now it's holding and going even higher. So traders are buying and they have a bunch of sells. And so when it finally liquidates that, all those sells trigger and the buys absorb it. There's enough buys in the zone to absorb it. How do I know that? I don't until it flips and closes above the zone that liquidated it, right? So here's where it liquidated it, the last point where it held, it held, and then it liquidated it. And it flipped and closed above it. So now let's switch back to candlesticks. Because what's important at that point of liquidation is when it closes above it. And then you look for the thing that caused it, which is right here, which it liquidated that barely and took this out because price action is messy like that. But it also had this really close zone right there. So, like, I feel like it was obvious, not that it was going to liquidate it, but to protect yourself at least with this zone. But anyway, so it came down, it liquidated that, and then it continues and it goes bullish, and that's when it targets the high. And then new strong liquidity was created here and all along these points that caused it. So let's go to the highest one that liquidated right here. It liquidated at this point. So the point that caused that liquidation is right there. Wait. Actually, no, the point that caused that liquidation, because it can't be where wicks are above it. It has to be the last point where wicks are not above it. Is right here. So, because this wick is not above it. These wicks are above it. So, they already liquidated it. This one did not liquidate it. It held. So, it held and then liquidated. So, here's the point of liquidation. So, when it closes below that, right there, that is a sign that's bearish. So, you look for the zone that caused that. So, here's where it closed below that, right there. Let's just look for the last wick. This one right here, this long one that came back and liquidated all that. So, when it comes back and visits that wick, that's where you enter the market. So look, it comes down, it never comes back up and visits, and you're like, oh no, and then boom, it visits that wick area, right? So the entry could look something like this. There's the wick area, there's the last zone that before that wick, so you can use that zone as your entry. Let's move it over here where price action hasn't happened yet. So right there, I'm using that as the very top of this low zone. And then to protect myself, all this price action right here is messy. If it liquidates this, it's probably going to chain and liquidate all of that. So I really only need to protect myself from here. So I'm wrong here. I'm probably wrong on all of that. That's all connected. So if it liquidates that, it's probably going to take all that out. So that's good enough. That's as tight as you need to be with logic. Now, that doesn't mean always use just that wick. If you have a wick that's nearby that could liquidate this one into, you can use that as your stop loss. But like I said, these are really close on this time frame. So if it liquidates this, it's not. And when you're doing this, you're just looking for where the leg continues, right? When you're a beginner, you're just trying to, where it pulls back to, you're just trying to continue the leg. So right there is a good reward. That's 3R. And in this case, it plays out. It comes and fills your order right there, and it goes and breaks that. Now, if you think that this is going against trend, well, let me see. On the 4 hour. Where was that? Oops. I gotta find where that was. Oh, boom. Okay, right there. So you are pro trend because it's going down, it's pulled back into the zone. So you're pro trend on the 4 hour. So technically, if you're pro trend and you think you're joining the trend, you can extend your targets a little bit. So you look to the left and use logic, right? I'm not going to cheat. We're not going to look to the right. Hold on. Let's look to the left and use logic to decide our stop loss. So, I mean, our take profit. So before our take profit is a continuation here, we're thinking it's a continuation of the 4 hour. So let's look to the left for liquidity. It already liquidated this stuff. So next nearby liquidity is that leads to a pretty tight demand zone. Look, that created a flip zone right there because it came, it paused, and then flipped. So that leads me to believe this is still pretty good liquidity, and there's a good target right there, which is that's a 4.6. That's not bad. And then barring that, so once it goes beyond that, all of this is a chain of liquidity that's all together. So if it breaks through this stuff, that's where you can assume that it probably will continue the trend of the 4 hour and break the low. So there's your next logical target, and then because all this is one big chain, your next right there would be the next one, but because look, all that has already been filled. All those orders have been filled. It's been sitting in that zone forever. So because of that, that wouldn't be good enough. I would be willing to target all that, which is a 12. Now let's see if that one plays out. Cool. The 12 actually plays out, which is pretty nice. And that's kind of how this concept works. You have to be very careful. You can't always swing these big ones. That's only because it was pro trend. It was with the 4 hour. If the 4 hour is going up and we were going counter trend, you couldn't do that. You could only target the 15 minute because it's dangerous to go counter trend. Does that make sense? That's kind of the crux of my strategy. And that's what point of liquidation is also, and how I use it. Okay, we have an alert on GU. Let me go back down to the current time frame where we at. Oh, okay, okay. Okay, it closed above the point of liquidation on this time frame, on the 5 minute, which means that this zone that caused it, like little, so I'm gonna go ahead and do a little mock trade. Now we're using a 5 minute liquidation zone, so actually I think it's actually a 15 minute liquidation zone, so we have to use a 5 or 15 minute target, which is liquidity right here. It's only 2R with all this liquidity resting up here. Three is my minimum, and it matches up with all this liquidity, so I'm gonna target all this stuff right here, which gives me 309. Let's go ahead and enter. I'm gonna just do a market order. What are we risking? Fred. Uh, what is the account size on this? 50,000. So over 250 bucks. Wait, how do I? It's this is all different than I'm used to. Holy moly! What the heck? They changed all of the settings. You used to be able to just literally type in your amount that you're risking. Oh, there we go. There we go. There we go. Okay. Make sure the market hasn't moved too far. That, that was annoying. Ah, shoot. Okay, well, I don't want to get in now. I guess it's just a demo account. It doesn't matter, I guess. Dang it. It's just, you don't want to do this in real life. It affects your risk reward like ridiculously. So I'll do it as a limit. If it pulls back in and gets me in, then it does. If it doesn't, it doesn't. That's okay. Oh, and I used Oanda, so it's gonna have annoying spread. But anyway, um, that's pretty much the concept. Let's just see if this mock trade even gets me in. Ideally, you'd already be in. You'd be in right now. Like when it came down, that's already in the zone. It'd be the top of this candle. I'd be fine getting in, I guess, on that case. But yeah, we'll see if it liquidates this stuff or not. It's aggressive because it did not close above it on the 15 minute, which is the time frame I like to look at. I'm only getting in this low because I'm live and I want you guys to see it move. Do you trade New York, Asia sessions? London, started London session mostly, but I might switch to New York soon, which would be nice. I don't think it's gonna fill me, or he'll just take me out. Any other burning questions or things you guys want me to look at as we're waiting for this potential setup to move? Hmm. We'll look at it on the 1 minute real quick, see if it's even possible to fill. Look, it even closed above this structure. It's very bullish. As you guys can see, had I been filled at the right time, it is kind of going my way so far. We'll see. There's no guarantee it's gonna though. I'm not, if I miss out, it's okay. It's no big deal. It's a demo trade, just an example. Not even in session. And if it's a loss, it's a loss. I don't care either. Do you guys pretty much understand the concept of what I'm looking at in the market though? Well, I wish I could just speed this up. Oh, that's where I was moving before. Wait a minute. I wonder, I'm gonna switch this. See something. Let's see how they both play out on the different markets on here. To be honest, I really don't understand it yet. I guess we're chasing a liquidity sweep. Someone says, yeah, literally, yes. So, again, to simplify it, to oversimplify it, I am looking for the market to be moving in a direction like this, like a 4 hour. So previously, see how the 4 hours moving up over here? What I was looking for is the market to be moving down on the 15-minute, right? Waves down into liquidating something and flipping. And when it flips, I want it to come back and visit the area that it flipped on the 15-minute to continue the 4 hour trend. So I can aim for liquidity targets on the 15-minute. That's pretty much the gist of it, to oversimplify it. Well, ideally you'd be in at this point when it pulls back here. Had I not been messing around looking for the price thing and using MT4 or something, would be in on this, but that's okay. Let's just pretend you're in. I hope I get filled anyway. Yeah, no. Well, I will post the result of this specific mock setup. Let me do this so that it saves. And yeah, I'll show the result of this specific mock setup in the markup board, even if it loses, just so that you guys can see it. I'll just say, here's from the mock setup in the live today or something, and we'll just see how it played out. But yeah, any other questions before we call it good? And I'll post the link. Yeah, like I said, at me, so I know who to give it to. I'll post that link though in the general on the Discord, and then um, go through some of those if you really want to understand. Again, those two that I listed, the mapping market structure and using internal structure as a guide, are really the main ones. But there's a bunch of resources in there. Just pick and choose and dabble when you can. Alrighty, guys. Oh yeah, we might get a fill. I'll wait a little bit. Where my orders? Here we go. That's gonna tease us. I'm a little dubious of this right here because of that. On the 15-minute, it didn't even come close to closing above it. It was just a liquidation. But on the 5-minute, it is the leading indicator that it did close. So we'll see. Barely, but it did. Kind of barely though. Okay, you guys got to see. This is the important part to me, though. It's like more than winning a trade. You guys got to see how accurate these concepts are. Where I marked up the flip zone, that's basically where price pulls back and holds to. The top of that candle on the 5 minute, right, is the flip zone. It came barely into that, and that's where it's currently holding. Where I marked up the actual zone right there is where price is holding. So whether it fills or not, the idea is this is where I believe bullishness could be, right, to fill. And yeah, I'm a little low if it never comes and fills, but that's the point of these concepts is look how I don't, this is future project. It's happening right now. We're live right now. It's, that's how accurate these concepts are. That's why I trade this way. It doesn't, I don't need an indicator or anything like that. It's understanding fundamentally how price works is why you can get to that level of accuracy. That's the point of it, right? And if I miss by a pip or something like that, it doesn't feel good, but it doesn't matter. It bolsters how accurate this stuff is. That's kind of the whole point in the first place. So I get excited sometimes when I miss by a pip because I'm like, well, it sucks to not be in, but I mean the accuracy is the important part for long, like the longevity. That means I understand how this stuff works, and that's way more important to me than an individual trade is, because like it's easy to trade as a trader if you fundamentally understand what it is you're doing. Looking for liquidity is a question of like what it is I'm doing. Yeah, I mean, looking for liquidity in line with the trend on the higher time frame. So like if we're bullish internally on the 4 hour, I want it to sweep. Like I want it to come down on the 15 minute and sweep the last bullish move and then flip back bullish. Cool. Someone said this is how I trade too. That's awesome. Love it. All right, guys. Like I said, I'll post the results if it happens at all. Even though I'm not actually in on the demo account because I got in late, I'm still going to post it as if I was in on that pullback to that zone because it did pull back to that zone. So I'm going to post it as is just because it's an example and a markup example. So I'm going to leave it marked up just like this and we'll see how it goes. Uh, that being said, I hope you guys did learn something. And if you have any other burning questions, make sure you guys think about them and you can post them up. I'll give it a few minutes for any kind of closing questions or comments. How long do you hold your trades? It depends because I trade on the 15 minute as my entry and I use the 4 hour leg as like targets. It depends if I believe I'm at a trend leg move and I'm going to target a 4 hour trend, I could be holding for hours or days. Like I think I've held trade for a couple of days lately. When I enter on the 15 minute using the 4 hour. But um, if I am just using a 15 minute liquidity in line of the 4 hour and I'm unsure that's where it's going to flip or the liquidity is kind of like suspicious or not the right kind, I'm using a 15 minute liquidity point. It's usually a few hours. Usually it'll either stop me out or take my profit in a couple 4 hour candles. So I'd say like 4 to 8 hours. Oftentimes the market will go. Sometimes it stalls out and you're looking at like 12, 15 hours, something like that. But I would say 15 hours is an average time because there's usually one big 4 hour candle that finishes whatever the concept that I'm in is going to be if it's a small distance trade on the 15 minute chart, which it often is. It's the most common kind. But like I said, the 4 hour legs, it can be a few days. I've never I don't think I've ever held over the weekend on my Darwin X account. On my live account, I've held over the weekend and regretted it because of like roller or slippage and things like that. So I don't often hold over the weekend. It's only if like I'm really serious about a move that and it's like most important is the move itself than anything else. I will just leave it and leave the take profit. But that's not that common. That's very rare, and it's usually during like a big trend or something like that. So I would say an average of about 12 to 15 hours, but I can hold them for a few days. But it doesn't matter. It's based on your time frame. If you enter in the 5 minute, you can scale that down, right, by a third of what I just said, basically. Depending. If you're using the 4 hour leg, then that's just what it is. You're gonna have to wait that time. But yeah. Alrighty, y'all. I'm gonna throw it on the ending screen and let us kind of wind down and settle our thoughts. Thank you all for coming. I hope you guys learned something. I feel like even though it was just me talking and there wasn't any lemons today, I feel like I didn't cover that much, but I was trying to look at live current price action for the most of it and talk about what's happening now so you guys can get this concept live since I didn't have anyone to bounce it off with. I thought it'd be more convenient for you guys to see it functioning in action. And I wouldn't say I forced a trade just now, but like I don't like to just get in a trade the minute I get in the market. But I did see it at a nice zone and figured it'd be good to um, give it a try and see how it looked with that markup. So I just wanted you guys to see these concepts in action. I really try to hunt for that a little bit when I'm live, more than I think I should in real life, because I want to teach you guys the concepts more than um, like getting a winning trade during the live session. Although it is nice to get those. Yeah, the concept is the most important part. So yeah, that was kind of my goal today, and I hopefully that came off well. Um, where's your TP in this specific scenario? Are you targeting the fair value gap? Okay, I'm gonna throw back up my screen actually. I was just looking for a liquidity target. This one didn't give me enough reward. I like 3R. That doesn't mean just target up to 3R just because you can. I was just looking, I was like, well, if it comes and liquidates that, look at all this resting liquidity. I could see it just liquidating all this stuff and coming up and filling this area. So I went ahead and just looked at what the top of that target would be, which is all these wicks. I could have targeted that wick itself, but that's just, it could fill right above there and then flip. And even though I don't think that's likely, that's a good enough target. It gave me a what, four something? Oh no, it's exactly three because I think I moved my thing up a little bit on this market because we marked it up on Oanda at first, but it was just over three. I think it was like 3.6 or something like that on Oanda. But it's just these liquidity targets right here because they make sense and they're above the 3R minimum that I like to look for. So those two conditions coincided and targeted that. And on this chart, it is 1.34081. I'm not gonna. Yeah, I mean, I'm gonna post it in general, not like I'm not gonna make an announcement or anything. It's just, can you at me, the user that's asking this, G drums, just at Jezza, in the Discord. You'll know it's me because it's high roller. I'll be blue lettering, or actually, I think my lettering is like fancy now because I have Discord Nitro. But um, yeah, just at me, and uh, so I know who you are, and I will reply to it with a link to that playlist because it's posted. If you go to live recordings, you'll see my list right there, so you can check it yourself. But I'll just post you a link to those two specific videos I was talking about, um, so you have them convenient. Just at me to make it convenient for me. Anyway, that being said, thank you guys. I'm gonna go ahead and cut it. Catch you next.